What's up, real estate investors? Today we're talking about the strategy most investors completely overlook, but it's one that's helped me scale from 4 properties to a growing portfolio in record time. Here's a question. How are you supposed to build a real estate empire when the banks stop lending to you after just a few properties? If you're actively investing, you already know what I'm talking about. You hit property number 4 or 5, and suddenly traditional lenders look at you like you're asking for a loan to build a rocket ship. Sorry, you maxed out your conventional loans. Your debt to income ratio is too high. We don't like seeing this many properties on your credit profile. Sound familiar? Today I'm breaking down exactly how I've used business credit card stacking to secure over $100,000 in funding for my real estate business. Money I've used for down payments, renovations, and even full property purchases, while my competition was still waiting for traditional bank approval. This isn't theory. This isn't something I read in a book. This is the exact system I used to fund my own deals when traditional financing options were exhausted. Let's get into it. Most real estate investors make a critical mistake in how they structure their businesses. They set up an LLC, which is great for liability protection, but then they completely neglect the opportunity to build business credit. Instead, they keep relying on personal credit until they hit those lending walls we just talked about. Here's what most investors miss. Your business entity can develop its own credit profile separate from your personal credit. And here's the best part. When structured correctly, you can access significant capital through business credit cards without impacting your personal debt to income ratio. Let me explain why this is such a game changer. For most business credit cards, don't report to your personal credit unless you default. This means you can carry balances on these cards without affecting your personal credit utilization ratio. Second, many business credit cards offer 0% introductory APR periods for 12 to 18 months. That's interest-free capital for over a year. Third, business credit cards often have higher limits than personal credit cards, especially once you establish a pattern with the issuing bank. And fourth, you can strategically open multiple business credit cards in a sequence that maximizes approval odds and minimizes credit impact. I use this exact approach to access over $100,000 in business credit lines within 90 days. Which I then leverage for my real estate business. The key is making this work isn't just applying for random business credit cards, it's about following a specific sequence and timing your application strategically. Here's what most investors get wrong. They apply for several cards at once, get a couple of rejections, and give up. But there's a science to this. Let me walk you through the framework. First, you need to make sure your business entity is properly structured. This means having a business checking account with some history, professional business address, not a P.O. box, business phone number, and basic business credit building accounts reporting. Next, you need to target the right issuing banks in the right order. Some banks are more friendly to new businesses than others. Some are more sensitive to recent inquiries. The sequence matters tremendously. For example, I always start with the Pacific banks that are known to be more lenient with new businesses and have higher initial approval odds. Then I wait a specific number of days, not too short, that the inquiries stack up, but not too long that I lose momentum. After that, I move to the second tier of cards. And by then, I've already established some history and make those approvals more likely. This is exactly why most investors fail when they try to build business credit. They don't understand the proper sequencing. Now, let's talk about how this translates to real estate investing specific. I've used business cards to fund down payments on rental properties, full renovation budgets, holding costs during flip projects, marketing expenses to find off-market deals, and even earnest money deposits to secure properties quickly. Let me give you a specific example of my own portfolio. Last year, I found a great duplex deal. The property needed about $25,000 in renovations to maximize rental income. Traditional lenders wouldn't include the renovation cost in a loan, and I didn't want to tap into my cash reserves. So I used 2 business credit cards with 0% introductory APR to fund the entire renovation. Property was immediately cash flow positive, and I was able to use the rental income to pay down those cards well before the promotional period ended. Another investor I know used business credit to fund a down payment on a small apartment building. He secured the property with business credit, then refinanced once he stabilized the building and increased the NOI. This strategy gives you incredible flexibility that traditional financing simply does not offer. So how do you actually implement this into your own real estate business? Here's a simplified version of the process. Step 1, make sure your business entity is properly structured. If you formed an LLC but haven't separated business and personal finances, you need to do that first. Step 2, start building basic business credit through vendor accounts and small business credit cards for your existing bank. Step 3, once you have some basic business credit established, implement the credit card stacking sequence, starting with the issuing banks that have the highest approval odds. Step 4. Manage these accounts strategically. Remember, the goal isn't to rack up debt. The goal is to leverage these credit lines for specific investment purposes with a clear plan to either pay them off through cash flow or refinance into conventional loans when appropriate. Step 5, track and monitor your business credit profile just like you would your personal credit. This includes strategically managing utilization rates and payment timing. This is a simplified overview, but the details really matter here. The specific banks you apply to, the exact timing between applications, how you position your business on the applications, these small factors make a huge difference in your approval odds and credit limit. Now, before some of you start worrying, let me address the elephant in the room. This is not about you taking on risky debt. This is about strategic capital management. Here are the protection strategies I always implement. I never use this capital for deals that don't make sense financially. The numbers still need to work. I always have multiple exit strategies for any capital I access this way. I maintain cash reserves to cover payment obligations. I track all obligations methodically and have the calendar alerts for promotional period end dates. When used correctly, business credit cards give you leverage and flexibility. It's a tool, not a crutch. The investors who get into trouble are the ones who use business credit without a specific plan or for the deals that don't make financial sense in the first place. So there you have it. The business credit card stacking strategy that has helped me continue scaling my real estate portfolio even after hitting conventional lending limits. If you found this valuable and want to learn more, I created a complete credit card stacking masterclass that breaks down the exact sequence, application timing, and implementation strategies. It includes the application sequence calendar, business entity optimization checklist, and everything else you need to implement this strategy. You can find this in the link in the description below. And if you're earlier in your credit journey and need to optimize your personal credit first, check out my 0% interest capital blueprint, which walks through the 60-day credit optimization roadmap I use to boost my score to over 800 across all bureaus. For those of you who are serious about fast-tracking your credit optimization process, I also offer a specialized credit optimization program specifically designed for real estate investors. Unlike generic credit repair, this program is built to help you unlock investment capital quickly. There's a link in the description to learn more about how we can help you optimize your credit profile and access the capital you need for your next deals. That's it for today. Drop a comment below if you have questions about anything I covered, and I'll catch you in the next video.